Hey everyone, this is Caleb Franzen with Cubic Analytics, and I wanted to put together this video today to kind of talk about some market dynamics pertaining specifically to Bitcoin and crypto, and to kind of highlight some of the key things that we're all waking up to on Friday, March 10th. So let's go ahead and dive right in. I put together this post not too long ago, about an hour ago, and I think it generally kind of summarizes all of the different bearish dynamics that are happening in the market right now. But this post can only do so much. So what I wanted to do was briefly go over each of these four main bullet points and sprinkle in a couple other charts that I think are important that crypto investors should have on their radar. So let's go ahead and jump straight in, because each and every one of these is a critical component within my overall model for how I'm approaching risk in the market, how I'm approaching bullish versus bearish dynamics, and just generally how I'm viewing things. And they're all providing critical and dynamic lines in the sand that we can manage risk against. And so as traders, as investors, that's exactly what we can hope and ask for, right? So let's go ahead and quickly start. We're going to go a little bit out of order, but let's go ahead and start with the 200-day moving average. When I put this post together, we were trading below this yellow line here, which is the 200-day simple moving average. But the key thing that I want to highlight here is if we zoom out, right, like let's really go back to the peak dynamic that we had, the peak of the market that we had in the fourth quarter of 2021. But even still, right, we could see that this dynamic range, right, we're looking at both the exponential moving average in blue and the simple moving average in yellow. A lot of people say they only focus on one, or here's why the EMA is better than the SMA, or vice versa. From my perspective, why not just use both and create this dynamic support and resistance range that we can now use as meaningful, as a meaningful level, right? So if we look at this specifically, we could see that, during that May 2021 collapse, acted as resistance again in June. We had some chop kind of in the zone. We were able to break back above it, support. A lot of noise right here going into December and January of December 2021 and January 2022. We tried to use it, but we had a clear breakdown and failure there, which was really the start of the bear market. If you consider that the breakdown occurred here at basically 46.7 thousand, right? I think going back in time, a lot of crypto investors would have loved to have sold their Bitcoin exposure at 46.7 thousand. Obviously, hindsight is 2020, but once again, this just continues to highlight why this is an important level, because that really was when the bear market kind of officially started. We could see again during that March 2022 rally leading into April, this was perfect resistance for Bitcoin, and we haven't retested it since then until this exponential rally we had to start the year. We were able to break above this range. That was a very bullish indication, right? That was right at 21,000, and we were able to get to 25,000. So, that's a 25% gain in the price in a matter of a couple of weeks. I think everyone would have loved to have caught that rally. If you've been following me, I hope you did. And you can see perfectly here, it acted as support. And so why is this important? Because, for the first time, basically since December of 2021 or January of 2022, we're starting to break below that range. The daily close now for March 10th is going to be very important. Obviously, if we can manage to close, somewhere back around 20,000 for the day, that's a good sign. Basically, live to die another day. But we need to rally here. Otherwise, it's a very similar kind of pattern and setup to what we experienced back in December 2021, January 2022, aka bad news, right? Okay, what I also would like to do is zoom out once again, and let's just focus on the 200-week moving average cloud. So we were looking at the 200-day before, but I also think it's super important to look at the 200-week. And this was something that I've been posting and analyzing on Twitter and on Substack. So if you're not following me there, I'm posting all this stuff in real time. And as we look at, this chart in particular, we could see that historically it's acted as very good support for Bitcoin, right? And in June of 2022, as we were approaching this level, I was highlighting it as potential support, but we failed to use it as support when we actually achieved the breakdown. Going into July and August of 2022, I warned that for the first time ever, this range could act as resistance, and that's exactly what happened. We went from 25.2 thousand all the way back down to 15.3, 15.4K. That's a very, very severe drawdown, right? So if you de-risked during this period and then DCA'd thereafter, hey, that you really set yourself up for success. Same thing here. When price was at 21,000, or 20 to 21,000, I highlighted this 200-week moving average cloud as a price target because once again, price has a lot of memory there. Why are we looking at 200 weeks? It's essentially a 4-year price average, right? So it gives us a very good indication of the medium to long-term kind of dynamics of price memory. Sure enough, we came right into that range, hit the target perfectly. I was warning about it as potential resistance. Sure enough, clean rejection, right? So far, keyword here, so far, the price of Bitcoin has fallen 21% since retesting that level. And this kind of cascading behavior that we're seeing here on the weekly is certainly not good after a brief sideways consolidation for multiple weeks. So, this is important. We're getting rejected on the 200-week moving average, and we're slicing or trying to slice below the 200-day moving average. It happened earlier this morning, and now we're fighting to get back above it, which is a good sign. Nonetheless, we should all have both of these two levels on our radar as, kind of our key lines in the sand from a technical analysis kind of standpoint. But what I'd like to do in addition to looking at these two charts is to look at some of the on-chain data, right? And so one of my favorite things to do is to look at the short-term holder realized price. I'm not going to go into exactly how this is calculated or why it's necessarily important. I've done a lot of posts on that in the past, but I was highlighting this in real time as we broke above it in mid-January, saying, hey, this is the first real breakout that we've had over the short-term holder realized price, basically since that March or April breakout. The thing is, going and looking at that March breakout, we did not sustain above that level. So it was essentially a failed breakout. And once we fell back below it, that was your sign for risk off. And so that's really been my line in the sand from an on-chain perspective of bullish versus bearish dynamics, right? So what we're seeing right now, it's interesting because this website, this resource is a little bit lagged. So we're not seeing it fall below it right now. But if we look at the actual short-term holder realized price as of yesterday, it's just shy of 19.9 thousand, right? So with where we are right now at 19.8 thousand, we're technically below that level, right? So again, this is a clear indication that we're moving back towards a risk-off dynamic, right? And this is something I've been forewarning, right? As soon as we get below that level, we need to recognize that we're in a bearish trend now, right? Look, this is a post I did on January 13th as we were breaking out. For the first time since March of 2022, Bitcoin is trading above the short-term holder realized price. As discussed before, this level can act as support during a bull market and resistance during a bear market. This is bullish so long as Bitcoin remains above the short-term holder realized price. Again, we're starting to break below it now. Interestingly enough, Bitcoin is starting to bid a little bit here, maybe after some overnight selling pressure. We'll see what happens. Right now it's trading at 19.8 thousand. Okay, this is very important though, because if we look kind of historically at the implications here for the short-term holder realized price, bear markets are characterized by a breakdown below this range and a sustained trend below it. You could argue that failed breakouts like these or perfect resistance like this are a sign of that bear market, right? Look, that was the 2013 to 15 bear market. If we look at something like the 2018 bear market, same kind of dynamic. Failed breakouts, perfect resistance, right? That breakout above it signaled the birth of the new bull market in a way, right? Because obviously we had the COVID crash and all that kind of stuff. Nonetheless, right, we can see it acts as support, it acts as resistance, it acts as support. We slice below it, we get back above it, bullish, bearish dynamics, right? And once again, we're seeing that play out now in real time. And again, that's the short-term holder realized price. But if we look at something like the long-term holder realized price, this is going to really help us kind of remove a lot of the noise. And interestingly enough, these bear markets are really characterized by price falling below that range and even using it as resistance multiple times. Once we break back above that range and stay above it, that's usually a sign of good things around the corner, right? Same thing in the 2018-19 bear market. We peak here at 20,000, we fall below it. This is a great accumulation period to accumulate when price is below the long-term holder realized price. As soon as we get back above it, hey look, birth of a new bull market, right? During the COVID crash, we couldn't even get below it. So let's look at what the dynamic has been lately. Let's start from COVID and go to today, right? We really try to use this level as support in mid 2022, but we flipped it into resistance in November upon the FTX situation coming to light. And so right now, that long-term holder realized price is at 19,667. Price right now is 19.8K. So we've managed to get above it over the past hour and a half or so. But when I put that tweet together this morning, we were below 19.667, right? So this is a very key level that we should all have on our radars. It's good to see this early morning bid, but this could change very quickly, right? So I'm not holding my breath that this move back above the long-term holder and short-term holder realized price are going to be sustained. We'll see how it shakes out. Nonetheless, I think all of these data points are very significant because once again, like I say, we have to acknowledge these bearish developments. We were bullish when these positive developments started to occur. We outlined our upside price targets. We hit them perfectly. Some of them didn't get hit. I had some loftier ones, and hey, that's fine, right? But our first and primary target, which was the 200-week moving average, got hit. We use it perfectly as resistance, as I was warning about, and now we're cutting below both technical analysis levels and on-chain analytics levels, right? And so this is very important now for us to remain flexible around these levels. It gives us great dynamic ranges for us to manage risk against, to be unemotional with how we're approaching the market. And particularly as we fall from 25,000 to 19.8 thousand, we've already gone through a pretty significant decline here of about 21%. And so we'll need to stay flexible here. Could we revisit the lows from November? Yeah, sure, it's possible. We're seeing another contagion event now with Silicon Valley Bank, so on and so forth. But one thing I'd actually like to do as I'm talking about this is, let's pull up Ethereum. Ethereum managed briefly to get back above that 200-week moving average, very similar to what it did in the March rally, in the August of 2022 rally. But again, that was a failed breakout, right? We were not able to sustain above this range. And so that was bad news there. Very similar to how we weren't able to sustain above it this time around. So we're getting back below that level now. We don't have nearly as much price data here for Ethereum as we do for Bitcoin. So, we're unable to see that there. But what I'd like to do in particular is to focus on the 200-day moving average. I did a post about this on Twitter this morning as well. But again, let's just sprinkle in some context here and really discuss what's happening. If I could just select this oval here. Okay, so what I want to highlight is very similar to Bitcoin. As soon as we fell below the 200-day moving average cloud, again, we're looking at the exponential in blue or teal and the simple moving average in yellow. As soon as we fell below that range, right, that was at $3,370. As soon as we fell below that, that was really the birth of the new bear market. Sure enough, we used it as resistance in that March or April rally, and again in the November rally just before the FTX situation. We managed to get above it, support, and now we're breaking below it. So on the Bitcoin chart, we're seeing maybe, we're seeing Bitcoin fight to get back above that 200-day moving average. Ethereum itself has more work yet to be done, right? And so as we think about the implications here, why is this important? Because, the general altcoin universe, particularly other competing layer ones and smart contract platforms, whether we're talking about Avalanche, Polkadot, Polygon, Atom, right? We can go on and on. All of those are really going to follow signals that we're seeing in Ethereum because Ethereum is the king of altcoins, essentially, right? It really is fintech at its core. And so if Ethereum is risk off, it's likely, keyword likely, to be the case that the other altcoin universe is also going to be risk off, right? And so getting back below that 200-day moving average cloud entirely is very important. And, this really highlights why I'm focusing on the cloud, you guys, because, look at this case right here. We fell below the exponential moving average. So if you were only focused on the exponential moving average, you would have been like, oh my God, this is so bearish, but we never fell below the simple moving average, right? So this dynamic cloud here is very critical. Likewise, if you were only looking at the exponential moving average here, you would have been waiting to maybe de-risk up in this range, but we only retested the SMA. So again, we need to be focused on both of these levels here because I think that they really do provide a more full context. And this entire range should be monitored, right? Not just the specific line, the specific level, the entire range below them, between them is very, very important. And so as Ethereum right now is trading just shy of 1,400, that simple moving average is $1,423. So if we can get back above there, that's a good sign. Ideally, I'd like to see price above both of these levels. I don't care if it's the exponential or simple moving average. I just want to see where price is relative to the entire range. To me, that's what's important. And so Ethereum here is struggling to do that. Just out of curiosity, I haven't even pulled this chart up. Let's see what total crypto market cap is doing. Again, I got a lot of noise here, you guys, so excuse me, but let's just focus on the yellow and the blue. We're below it. Let's look at total 2, which is crypto market cap excluding Bitcoin. Significantly below it. Let's look at total 3, which is crypto market cap excluding Bitcoin and Ethereum. Significantly below the 200-day moving average cloud, right? And this is very, very key, right? Because even for this level, support here, kind of support, resistance, resistance. I don't think we perfectly retested it there. Resistance through here, flipped it into support, and now we're having a breakdown. So guys, holistically, what we're seeing across the charts is the riskier segments of crypto are looking more and more like a risk-off type of dynamic. The on-chain data points, particularly the short-term holder realized price and long-term holder realized price for Bitcoin, aren't looking great. Obviously, this is going to be a very flexible and dynamic period. So we'll have to, move with what the charts are telling us. If price starts to develop again in a bullish manner and sustainably get back above the key levels that we've discussed in this video, hey, that's a great sign. We can become bullish again. But until then, right, I think bias has to shift a little bit towards being bearish or defensive at the very least. So I'm going to cap the video off here. Thanks for tuning in. I'm in Croatia right now, so my background might be changing or looking a little bit different. So you'll have to bear with me here as the set or the environment kind of changes. But I hope everyone is doing well. Happy Friday, happy weekend, and I'll talk to you very soon. Bye.